What's up, Bat Fam? Welcome back to the Build a Trader YouTube channel. In this video, I'm going to be teaching you guys how to trade the NASDAQ 100 using a strategy that I use using price action and momentum. This is a day trading / intraday trading strategy. This strategy can also be applied to all stock indices as well as the futures market. If you're on my Telegram or premium Telegram channel, this video is only going to add on to the skill set you already have and the skills you're already learning. But if you're new to the channel, go ahead and hit that subscribe button and go ahead and check out this playlist right here if you already don't have a foundation and understanding of trading already. Now enough rambling, let's head to the charts.
All I do is daydream. They've been sleeping on us, I'm just trying to see what they...
What's up, Bat Fam? Here we are on the charts. Right now we are on TradingView looking at the NASDAQ 100. Now just going to be about 10 to 15 minutes of your time, and you will learn how to apply this strategy or this method of trading to your own trading and can potentially catch some nice movements on the NASDAQ 100 or other stock indices. All right, so if you've been following the channel for a while or have been in my Telegram channel, then you already know the process of how we do top-down analysis and look for the overall trend direction and buys for the market. Once we've already done that, now right here we have a plain chart, okay? Once you've already marked it up, as how I have on my chart that I trade every single day, you're going to look at certain areas and certain places of reaction and where price could possibly go to where you can either jump in with price or catch the initial reaction and catch the momentum from that area and take a quick scalp. So here I'm applying this level of resistance. Right here is where the market opened this week and is where we're at currently to start the week off. Right now it is Monday heading into Tuesday, and this blue box represents market open to the current price. Okay, so how could have one caught this move or found some trade opportunities in this area? Okay, first we got to mark off some things. Right here is our previous weekly low, our PWL. So I'm going to mark that off real quick. Previous week's low. It's important to know these things because if this area breaks, then we're going to head lower, which as we did today. Next, we have this level of resistance. This is the daily high or the London session high, you could call, because this was the high made for the day, but also it occurred during London session. So we can call this daily high here. This little wick is. Actually, I'm going to use this. This is a little cleaner, and it's easier to see. Daily high / London high, okay? Right where this wick is on this bullish candle. That was the high of the day. So you have to mark these areas off. You literally have to do this every single time or know where they're at, because this is going to give you perspective into what the market is really doing, okay? These areas are very important, and they're often where liquidity is taken or where breakout trades happen or where price ends up reversing and going the opposite direction, okay? So here we see the rejection here on the 30-minute time frame. You'd see a shooting star type of candle, and then the market ended up transitioning, go bearish, right? So let's measure some candlesticks real quick. This is the price range tool. On this 30-minute candle right here that I'm measuring is 30 pips, okay? 30 points, sorry. This yellow candle is 30 points, okay? The duration of this move down to the previous weekly low is 100 points, 105 points, okay? So here is where scalping momentum and these type of trades come in. Now, if you're scalping momentum or just trading in general, the whole point of trading is to make money and make a profit. So you don't have to hold your trades to take profit points or just certain levels. You can literally just close once you have 20, 30, 40 pips and call it a day. And especially on these indices, a lot of times there's going to be strong movements and it may push 30, 40 points in one candlestick, and you can just close and call it a day, just like that, instead of being greedy and holding through the volatility and, possibly losing or catching a big win, whatever it is. This is how you scalp and catch the momentum trades. You're not staying in too long. You're literally trading the momentum until on the lower time frame, you identify that something is changing or that you need to take your gain, okay? So in this instance here, right here is a lower time frame break of structure. We were measuring this bearish candle right here. About 35 points is where this went. Okay, these three candles represent the 30-minute candle. This candle is 5 to 5:15. This is 5:15 to 5:30. This is where the 30-minute candle opened. Okay, this candle here. So let's say you entered on this candle right here, this bearish candle. Right, you identified that structure is changing. We're at the daily low. It doesn't look like it's going to break. We're at a level of resistance right here, and you entered on this bearish candle right here. So I'm going to add the risk to reward tool. Right there, you have your stop loss above the highs. You do not need to hold all the way to down here, to where the blue line is, to where this previous week low is. You don't have to hold all the way down there. Although that's where it went, you don't need to do that. You could have closed right on this candle. Momentum trading and scalping is simply taking with what you have and going with the flow. But as you can see, this trade would have put you in a profit with next to no drawdown, if any, and would have been instantly up. Well, not instantly, but it would have pushed in your favor for 18 points right here. Next candle had a little pullback and then continued down for a nice 26 and eventually pushed for 37. 26 to 37 points, all right? So 25 to 35 points roughly. Now that's a really good trade, especially if you have a 1 lot or even a 5 lot. A 1 lot, that's $250 to $350, and on a 5 lot, that's $1,200 to $1,750, all right? You know, it's all about perspective and lot size and understanding that you got to take your gain. If you have a bigger lot size on, obviously the gain's going to be more, and you need to take that. Now, not that lot size necessarily matters in this situation. I'm just using it as an example because in this 5, 10, 15-minute span, on those lot sizes, if you had a 1 lot, you'd have $250, and a 5 lot, you'd have over $1,500. You know, that's really quick money and really quick profits that you need to take. Now, the move obviously pushed all the way down, but sometimes you could see it retest and come all the way back up, and it could either take you out or you'd be in drawdown or whatever, but you would miss your chance to close. All right, so you're going with what is happening. All right, so let's go to another example. Right here at 6 a.m. today, this is New York Open. So 5 o'clock is New York Open, and then 6 to 6:30 is where the volume starts really picking up. So this is the 6:30 candle, and as you can see, this candle moved for 70 points to the downside. Okay. Here's how you catch some of these situations. You already know that the trend is bearish. All right, so let me zoom out. You know the trend is bearish. This right here was the little area we were on taking our sells. As you can see, you don't have to catch the whole entire candle, but this is the 1 hour candle, and we got out. There's retracement, and then as you can see, ultimately pushed down, broke the weekly lows, retested, and continued pushing lower. So here's how you can catch another setup right here. And I'll show you one more after this that I caught last week, although the first attempt was a losing trade, but I can explain why as well. It wasn't in the right context either. But I did have an opportunity to close and didn't take it. So right here, right at 6:30, you understand that this is a level of market structure right here. You understand that lower time frame structure already broke. You're anticipating two things: either price to come up and retest this area and then continue, or you're expecting it just to have a pullback and continue lower. And what happened was we had a pullback and it continued lower. All right, so let's say you entered sells right on the break of this minor support. Stop loss right above the SWIC, because with momentum and if there is lots of volume, the market's not going to come back after it just pushed up and flipped bearish. All right, and breaking a lower time frame structure and support. It wouldn't just flip like that again. Okay, that just doesn't really make any sense, especially during a high volume time. So as we can see, this lower time frame structure broke. There was a strong push. Okay, now you could have held all the way down to the support, which was 70 points, as I had showed previously, all the way down here. But if you didn't do that, you could have literally closed either halfway through the candle or when you saw a pullback. So here on the 3-minute candle, you see that it pushed. You could have literally just closed right on that candle. Okay. On the 1 minute, let's see if there's any pullbacks. No, it's pretty strong momentum the whole entire time. So you could have held or just simply took your gain at 30, 40, 50 points. Either way, there's nothing wrong with that because that was a pretty large movement in a short amount of time. That only took 7 minutes total for this whole entire duration, for this whole entire move. 6 minutes, 7 minutes from this candle, 6 minutes for all these candles right here. That's a really fast move. That's a really quick gain. That's a really quick profit. And you need to take those, especially when trading highly volatile assets, because they have the high potential of reversing a lot of times, especially after big movements. And although it was moving bearish and moving in our favor, at this point right here at the previous weekly low, it could have just shot up and had a huge retracement. All right, so let's show another example that happened during FOMC on Wednesday. Now, I took this trade right here where I'm drawing this blue line. That's not where I took it. I took the trade down here. I took some buys, and I'm just mapping out certain areas so you can see. We have where structure broke right here, which caused this large bearish move. We had some strong reactions down here, which caused that bullish move up after the large move down. So what did I end up doing here? Let's take a look. So this point right here, I had taken buys on this. Expecting this move up to 11850. Had my target down here, but the level was right up there. But I had my take profit right here. I entered on these buys, okay? I was taking out on this bearish candle right here. And as you can see, the move did happen. But what happened first? So this is where you need to focus on taking what you have or managing your trade. No, I had just taken a loss. However, this was a really good trade. This was a 50, 60 point move that I did not take because I was anticipating a larger movement. But if you're trading momentum and scalping, you need to take what you get, especially when it's highly volatile in these certain times. This was right after a news release, and we just shot up that much. There would be no reason why I shouldn't be closing and taking profits for that. Despite being in a loss, you have to force that stuff out of your mind and focus on the current opportunity that you have and the current trade that you're in. So here we are on the 3-minute time frame. As you can see, there was a push, a rejection. It went up to 118. Could have closed there, but I was being greedy and was wanting 50 more points, and it did go. But what happened first? I lost. If you're trading momentum and scalping, you need to close and take what you get. Otherwise, you're going to lose and miss your opportunity, and then you're going to just lose the trade. And especially when you had multiple opportunities to get out and make a profit on it. Okay. So next, right here, you could have taken the same exact trade setup again. I did not. I called it a day after this because, I just taken multiple losses. There's no need for me to force anything else. And it did happen though, but you could have taken the same exact entry opportunity, same exact price, same stop loss, literally same everything, and it would have worked out. So sometimes trade attempts take a few attempts to catch the overall move. Usually it might take one try, sometimes 2 or 3 tries to catch the move that you're seeing. But if you're scalping momentum and trading with momentum at high volume times, you need to take what you get if you're trying to win. All right, because not all the time price is going to go to your take profit. You might have 30, 40, 50 points on a trade before it goes back the other way and takes you out. And those are the times you need to close and take your profits before that happens. Now, I know this is a little harder than it seems, but it comes with experience and ultimately having the right mindset and not being greedy. When you focus on too many things and focus on too big of moves, you miss the overall point of trading, which is making a profit and making money. No one's going to give you an award for hitting your take profit price. Yeah, you might make a little more. However, a lot of times you may lock yourself in because you keep fixating on your take profit price. When you're scalping and momentum trading, you're essentially just flowing and you're understanding that there's going to be another opportunity coming up. All right, if you close early and it went on for 20, 30 more points, it's all right. There's going to be another opportunity, especially if you know how to trade like this, especially if you can identify good entry opportunities. There's multiple opportunities every single day. So you don't always have to catch these big moves. 2 or 3 smaller moves might add up to over 100 pips. All right. And that's just how it is. You will find that you may end up more consistent if you trade like this instead of continually managing your trade, plays out to take profit or not. And a lot of times you'll find that you're just simply being greedy instead of taking your money like you're supposed to. Now, if you've seen some of my other videos or if you're in the premium Telegram channel, you already know that when I utilize this trading strategy, I'm also finding additional opportunities, additional entry opportunities to further add to my positions and potentially have a bigger profit. If you want to learn more about that as well, I have 2 videos right here that can help you learn more in depth on the scaling in and finding additional entry opportunities on your trade setups. And this is how you can maximize some of these momentum plays and these scalp trades by, although it was a smaller move, it didn't go for 100 points, but you got 50 points, 40 points, but you have 4 additional positions on. You maximize that trade opportunity and made more than you originally planned on a highly probable trade setup. And at the end of the day, that's what we want, okay? In my opinion, utilizing both strategies and methods, utilizing the scaling in entry method, utilizing momentum trading and scalping, and trading price action, go hand in hand together and can really help you become more consistent and help increase your profitability. If you found this video helpful or learned something from it, please like and subscribe to the channel, and don't forget to join Bat Signals free Telegram and follow the Instagrams of Build a Trader Bat Signals. And I'll see you guys in the next one. Peace.